Hey guys, Candlesticks here. Welcome back to another Weekend Trading Edge video. This week we're going to be short and sweet. Usually in this weekend video I give you the top 3 trading ideas that are on my radar for the week ahead. But this week I'm going to give you one. Not because I'm lazy, but we've got our Emergence Workshop kicking off on Monday, and I want to get finished on the training for that Monday session. By the way, if you've signed up, you should have received an email already that allows you to set up your account. That way you can log into the platform and do all the fun stuff that's available on there over the next 2 weeks or so. And if you're just hearing about this, still time to sign up, right? Just go to www.tier1trading.com. Little banner should pop up. If not, just hit the link below this YouTube video. Register, it's free, 2-week event. All the details will be given to you on the site. All right, let's hop into today's trade of the week, and we're going to go back to the Euro Aussie. Euro Aussie, this one should be very familiar for those of you in the live trading room, for those of you who join me on the live stream on YouTube, and for those of you in the Trading Edge. I believe we've looked at this before. But we are still in a continuation phase here, right? We came off the cipher, now we're in a continuation phase. And we're looking for a continued move lower, right? The 2 green lines right here, those are the lower levels of structure or price, I guess you could say, that we're expecting price can continue to. And we had a really interesting occurrence this week. So first and foremost, I'll back up and take things kind of slow, right? We came down here, we had 2 things, right? We had a double bottom. We also had a cipher pattern at this double bottom, which worked out really, really well. Cipher reacted, gave us profits up here, and then we broke and closed below, right? This is something we're going to be talking about in the workshop, just rules for identifying a trend, rules for identifying what price has done, and based on what price has done, how you can make high probability predictions off of it. And the fact that we took out this double bottom allows me to predict that price is likely to continue lower. Then we did all types of analysis, looking left, structure leaves clues, we threw some volume up there and whatnot, some fibs as well to kind of project what price point we would expect it to continue down to. Now, what we're looking at is a pullback trade. And in a pullback trade, we have what's called a structure swap. So at one point in time, right, this funky little box that I drew out, this acted as a level of structure support, kind of like a floor, right? Price hit the floor, bounced off the floor, came down, the floor stood. However, on the second time, it broke through. What happens when structure support is broken or violated, as we'll say, is then we now expect it to act as resistance. So the floor essentially becomes a ceiling. Peter Brandt calls it the ice zone, which is a much more brilliant name for it. But imagine structure being like a frozen lake, right? When you are on top of the lake is supporting you. The ice is supporting you. It's stopping you from falling in. However, once you crash below it, imagine yourself kind of transforming into a fish, I guess. Now that level of ice is resistance, right? It's preventing you from going to the upside. And that's typically what we see happen with structure. So the cool thing from a bigger picture about this trade is that we're on a nice little pullback right now, which is a little bit of relief, which will allow sellers to reload and get involved in the market. The thing that we don't know is how long or how far is this pullback going to pull back. And when we go down to a lower time frame, we'll be given some more details on it. Now, here's what makes things interesting, and this was an interesting conversation we had in the live room. Initially, this was the level, the first, I should say, level of structure that we expected to hold, right? The ultimate one is up here. As long as we don't violate this, we're still in that selling scenario. But this was the first level of structure that we expected to hold. And as you can see, we put in a higher high, higher close. And we had a really good discussion about double tops and whatnot and the validity and the what isn't as important as the where. And this is a great example because yes, we do have a double top here on the 4-hour, which a double top could be looked at as a selling reason. However, that double top, the formation, comes above the level of structure that we were looking at. Now, how you want to handle this situation is completely up to you, but for me, this is not a tradable double top, right? I want to see my double tops at very specific locations. The fact that we violate this level really negates the trading opportunity. So I have to wait for something else, perhaps like a 2618 or a method that I'll show you in a little bit. Now, that doesn't have to be your rule. Your rule can be, hey, this is the pullback. I'm not worried about that little small pregnant pause. I'm still looking to take this double top, and that's perfectly fine. And the way to weekend it, you're actually getting some pretty powerful candlesticks. Again, candlesticks is something we're going to talk about in Monday's session of the Emergence Workshop. I just finished a recording on that, talking about not just looking at them as being red or green or looking at them as being buy or bullish or bearish, but actually reading and interpreting the story that they have to tell you and how that can leave some very interesting and important clues about the market. So again, shameless plug. If you haven't registered, do it. It's a 2-week event. It's the biggest one we've done. It's a little bit different, which is really exciting. I think you guys are going to love it. But don't kick the can on this. It's free. So there's no excuse for not registering unless you purposely want to sabotage your trading. And some people are afraid of success. So believe it or not, that's more frequent than you would think. But fact of the matter is, back to the topic, we're getting some pretty good candles here. We have a nice doji candle here, which is indecision. Then we have a nice long wicked candle to the upside, right? This is a bullish candle technically, but it's really look at it as a bearish candle. So it's a weak bullish candle because we close in the lower third. And the same thing right here, an inside bar, which is consolidation, not giving any bit of bullish optimism because of how it closed. So you can certainly look at this formation, look at this as a positive sign to take the double top. And again, that will put you at a really good risk reward. Let's say if you were to enter at market right now, if you were to hide stops right above, you can look for a retest of lows as a very safe target. That's a 3-to-1 right there. And that's not even counting kind of the extension lower that we would anticipate. And give you some fibs in a little bit. You can see your 127 down there at 141.50s and the 1618 a little bit lower at about 139.50s. Now, another way to handle this, if you want to be more conservative, is, say you're, I don't trust the double top, Akil. It's a double top, but it's not at the location I want. So wait for confirmation. And confirmation that this double top is valid or should be playing out is going to be a break of the V point, right? This little point right here. So if we break this V point, you can wait for that for your selling reasons as well. Depending on how you put stop loss, it may affect your risk reward. Again, we're not going to go into details about that here in this YouTube video because we want to keep this thing as simple and as beginner as possible. But you always got to measure entry, stops, and targets and take all of that into account. So that's another option. Wait for that break and trade, or of course your classic 2618 where you wait for the break, wait for another pullback, and then try to involve yourself on this move down. Now, obviously, the more conservative it is, the less likelihood it has of happening just because it's another move. So this thing may just go down without you, but that's part of the conservative nature. So the last part I want to talk about is if we get a deeper retracement, because this double top doesn't have to work. Again, I'm not a fan of the location. So another question you want to ask yourself is what happens if we break to the upside? If we break to the upside, where are we likely to continue next? And then what you want to do is you want to start pinpointing the location of, hey, where do I think is the next stopping point? You can see long day of training already. Where's the next stopping point in the market? And then your job as a trader is to ID that next stopping point. And then you have two choices. If you are strictly a seller, you wait until price action gets to that stopping point. Obviously, wait for your reason for entry and then try to catch the next move down, right? If this ended up being like a complex pullback, I apologize for drawing the stuff, so much stuff on your chart. This is not very, I don't want to say it's not professional, but it's not really helping the new traders. But hopefully you guys get the point that I'm trying to make here. So you can look for that next stopping point and then sell it like on a complex pullback. Or if you're an intraday trader, maybe even go down to a lower time frame and buy it from this violation up to there. You can see we go down to the hourly. It's going to look more head and shoulders like. So hope that wasn't confusing. I promise the event won't be confusing, but if it didn't make sense, that's why you need to come to the event and learn this stuff. That way it's a little bit easier to follow along. Trust me, a training environment where I can sit down and make videos and share it with you in a slower fashion is a lot more educational than these YouTube videos. I don't think these YouTube videos are that educational, more informative. They're showing you examples. They are teaching some stuff, but it's not formatted in a way that you're supposed to learn, meaning it's not taking baby steps and progressing through. So hope you guys enjoyed. Do me a favor, support the video here, hit that like button, leave me a comment below if you have any questions or if you just want to say, hey, Good job, Akil. Make sure you're subscribed if you're not already. And of course, make sure you sign up for the Emergence webinar. Again, it starts Monday, but it's going to be a 2-week event. So even if you're watching this video a little bit late, you don't have to be there for the beginning. The stuff is going to be recorded as well. So if you're a week late, if you're a few days late, register. You'll still get the link. You can log into the platform and watch everything you missed over the next 2 weeks. All right. Until next time, plan your trade your plan, and I'll see you on the platform Monday. Oh, Everton. Thank God. Sorry, Man U fans, but thank God.